a better part of a decade. And then after I left there, I helped form outsource accounting side of an advisory firm. So we do kind of outsource controllership at CFO services for nonprofits as well as for-profit businesses. When I was an auditor, I probably did about 100 nonprofit audits a year, and it ranged anywhere from very small organizations all the way up to like large governmental units. So have a bit of experience in the nonprofit world and grant management. So that's actually where all of my information comes from, and kind of from a compliance standpoint. So let me share my screen here. I can start the presentation. Can everybody see the screen all right there? Does it look good? I think. All right. So kind of what we want to go over today, and kind of the important parts of grant management, and probably the reason everybody is here, is that we're going to talk about the different types of grants, their accounting treatment, kind of grant applications, and why budgets are so important when you're setting these up. And then also how to use those budgets after the fact, kind of to report and make sure you're not double dipping on expenses, making sure the accounting system is set up for success, or how to, like grab that information or ask for that information from your accounting department, and allocation of expenses, why that's so important. And kind of that's really the crux of, I think, why we're here, is being able to get good reports on what was spent during a grant, and then how you can make your life easier for grant reporting, whether that's the narrative side or the financial side when you're reporting. And then we dip into some other types of compliance issues that should be considered when taking on new grants or understanding the grants that you currently have. So what are the different types of grants? There's really three different types of grants. The one that I think, like the traditional grant or the kind of old school grant, is found, like private foundations or foundations that grant money. Usually money is given up front, and it's usually restricted for timing and purpose. And those funds are released, or they are unrestricted as the milestones are met in the grant. Then you kind of have the fee-for-service arrangement or reimbursement grant. And those flavors of grants are usually issued by governmental, state, or local municipalities, much like Measure 110, where 110 is kind of like a traditional grant, but it was kind of handed out from a local government. So there's two different types of grants that are normally procured through governmental, state, and local municipalities. They're fee-for-service arrangements, where you provide a service every month and you bill them monthly for those services at a provided rate. And then there's like the reimbursement grants, where your budget is laid out. You're going to spend that money. As you spend it, usually on a monthly basis, you submit invoices for reimbursement to the agency that has granted you the money. Usually they ask, much like Measure 110 has that grant reporting kind of Excel sheet that they sent out. Usually they'll ask for a budget template like that to submit for reimbursement on those grants. Or they want you to go back and fill those out, like in the case of 110, where it was kind of issued more like a foundation grant. They want you to go back and tell them how you spent that money, where you spent that money, did you follow the budget kind of situation. So what's the accounting treatment for the different grants? A foundation grant, you're recognizing all of that revenue the minute the grant award is signed. And then it's, unless there's a condition, if there's some kind of like matching funds or milestones that need to be met, they might give you half up front and half after you've serviced X amount of clients, or, after X amount of months or something like that. There's a condition that needs to be met before you receive the rest of the funding. So that's kind, and it'll throw off, if anybody has ever reported to a board or anything like that, when you get these foundation grants, it shows up in your revenue right away, the entire amount of grant, and it could be 2 years worth of funding that you have to recognize that revenue in. So managing that and being able to explain that to both, board members or to even program staff, to make them aware, like, this has to last us for the 3 years of the grant. They gave us $300,000 for 3 years, means your spending is about $100,000 a year, and understanding how that rolls through the accounting system. Then there's like we talked about, the fee for service arrangement or the reimbursable grant. Essentially, these are recognized as the services are completed. So like the fee for service arrangement, if you were servicing a population of recipients, as you either met the number of recipients that needed to be served or a time frame, like every month when you're billing, that's when the revenue would show up in the accounting system. That's when you report that you earn those fees for the service. Reimbursable grants, again, same kind of deal, usually happens in a monthly kind of cadence where the expenses are spent, you send off for reimbursement, and you backdate that invoice to the end of the month when the expenses were made. So what you're really trying to do with those bottom two is really line up the revenue coming in with the expenses, and the system that works best for that we'll talk about in a bit. But that way you can kind of see, as you march along with these programs, it's very much like if you were like a plumber or an electrician or a carpet cleaner or anything kind of like those service kind of for-profit businesses, you really have the revenue and expenses associated with it each month. And for a reimbursable grant, it's all going to total to zero because you're getting as much money in as you spent. So with a little bit of admin, but we'll talk about that in a bit, admin expenses. And of course, expenses are always put into the accounting system or recognized when they're incurred, meaning if you get an invoice on the last day of the month, that invoice should go into the accounting system on that day. Or if you receive an invoice the next month for services that were rendered in the month before, that should be backdated to the previous month so that you can match up the time period in which the expense was made or incurred with the time frame in the accounting system. So everything's up to date. Jumping into grant applications. So often I've met a lot of nonprofits, especially board members at nonprofits, that think that grant application is kind of like just casting a wide net, asking for money, applying for it, kind of a black box opportunity. But to be honest, grant procurement is a lot like cultivating donors and having a relationship with your grantors or the county and state representatives. If you have a good relationship with them, it's often likely that they'll come to you with grant opportunities. And we've seen that, especially with like OHA recently, as well as like these Measure 110 dollars, where they have an abundance of funds that they need to disperse, and they're looking for organizations that would be a good fit for those grant funds. So, again, grants aren't issued by AI or computers yet. It's done by people, and having a relationship with them is very helpful, not just in the beginning of applicating, but being able to, be in contact with them after the grant has been issued and working with them. It's a two-way street. You want to make them aware of what's going on, and they want to be aware of what's going on and any hiccups or anything that come along the way. If you've written grants or you've been involved in the grant writing process, it's a very time-consuming process to, get the grant application in on time, being able to, plan around it and understand what the requirements of the organization is going to be able to secure one. And I always advocate, in the most successful nonprofits I've worked with, include everybody in the process of writing those grants that's going to be involved with it. If you have a siloed grant writer in your organization and you're just relying on them to be able to put down narratively as well as financially what's going to be needed in delivering a service or a program, you're missing out on those program directors and managers that are really the boots on the ground and understand what the requirements and the needs of those that you're serving is going to be, as well as the needs of like the administrative side, if you're not including accounting, for instance. Even executive directors, I've seen looped in on the grant writing process and really successful organizations, and they're essentially there to make sure that the grant and the programs that are being suggested or the application is following like the main mission of the organization and following where that organization wants to go. So it's essential that everybody gets involved with that. When they're not, especially program staff, especially if they're not involved, not staff, but directors and managers, excuse me, if they're not involved in that grant application process, there's missed expenses, under budgeting for things that are needed. And in the end, it's the participants and the recipients of those grant funds that are going to suffer if they're not involved in it. So again, it should encapsulate, the grant application should really encapsulate what you're doing, how you're doing it, and who the people that are going to be affected by those grant funds are. So budgets, huge part of putting those grant applications together is the grant budget. There's a narrative portion to it, but the most successful ones are melding the two of a narrative and a financial aspect of that grant application. So the big thing is, and this I think these slides here are really the crux of starting off on a good foot. And we can talk about if you're inheriting a budget that maybe doesn't match your accounting system in a bit, but the best thing to do is making sure that your expenses that you're putting on your grant application matches your accounting general ledger. I know we had a question come in, like, what happens if it doesn't? I'll get into that when we talk about like the summary versus long budget portion of the presentation, but making sure that if they're asking for a summary budget and you're at the ground level of applying for these things, that summary budget is mapped then to expenses that condense down into a longer budget. Again, asking that people that are going to be delivering these services, or at least overseeing these services and programs, is involved in this, and making sure that you're not missing out on expenses that are needed for those programs. Also, too, not to forget that there's an administrative cost of being able to deliver these services, invoicing, oversight, that kind of thing. And so going after as much administrative overhead as the grantor will allow. We all know 10% is, 10% administrative expenses is kind of the norm or the rule of thumb, especially around governmental grants, but it never hurts to ask for more. The other thing I might mention is if you have a reimbursement grant and it's going to cause you, you have to hire 20 people, we know that a reimbursement grant the money needs to be invoiced as it happens. If you have a large outlay of funds that you may not be able to sustain in your organization, asking for upfront funds or starting funds is always an option, and working with that grantor to get those upfront funds to be able to stem the period in which you're training and deploying people. And the payroll, the payroll one is, huge. It's personnel that drives nonprofits, and being able to provide payroll to 20 new people to operate a program or a new program or a new offering can be very taxing on the cash flow of a nonprofit. So making sure that you're building that into your ask from the grantor, or if you've been awarded something, asking for upfront funds to be able to stem that cash flow shortage in training and bringing new people on. So let's get into like what an example of a budget summary looks like. And this is, I made this before the 110, that kind of 110 Excel reporting was issued, but this is very similar to what you would see on that nonprofit. The Oregon Health Authorities kind of thing here, where it's personnel costs, and it's very truncated kind of reporting on how much that approved budget amount is, and then how much the expenditures to date is. This is kind of the same kind of thing. It's very truncated. What's personnel, what's benefits, what's travel, what's equipment, supplies. We're talking about a very condensed kind of budget here. And that's usually what funders want to see. They don't need all the details, but if you have a summary budget like this, it should be then related. What makes up personnel? Well, that would probably be like wages and taxes. What makes up travel? It could be more than just travel on your expenses. It could be mileage or company vehicle costs, stuff like that. Supplies is another one. Is supplies broken into a few different lines in the expense listing of your nonprofit? You need to be able to relate that back to the budget summary. So even if you've had, if you submitted a budget like that and you have this and you're like, boy, what do I put into like personnel cost? You know, I would take the expense portion of your nonprofit and map what personnel cost is off this sheet, you know, and say that includes personnel, taxes, workman's compensation, you know, fringe benefits, reimbursements for personal expenses, maybe if that's included in personnel, but it could probably go down in service and supply costs. So just mapping these to all of the expenses that you're incurring underneath the grant. And then if the grantor asks for support on that, you have that mapping of like, here's everything that makes up personnel costs. Here's everything that makes up, you know, program and training. Here's everything that makes up supplies. Here's everything that makes up any capital outlays, meaning buying like vehicles or buildings or something like that. And then what's your administrative burden or whatever you charge for administrative overhead here is important. So in this situation here, in my example, you're showing where the funding comes from, but I really want to focus in on the program budget's main categories or summary portions, because if we look at like the program budget expanded, we have here like the wages and taxes relate to salaries and related in the previous slide. Health insurance and retirement is the fringe portion of that. Mileage, reimbursement, company vehicle costs is related to travel and related. Computer and technologies, testing equipment, program supplies, and general supplies, these all roll up into what was listed on the summary budget as supplies. So being able to have an extended budget like this that matches the summary budget, or if you're coming in and you have just a summary budget to look at to report on like OHJRA is giving, being able to map that to the entire kind of GL or expense listing that you have in the accounting system is vital. If you're on the program side, you want to be able to ask for something like this and maybe ask for assistance from your accounting department or map it out yourself. It should, I'm hoping that there's enough narrative form of what the expenses are to be able to relate it back to a general category in the summary budget to be able to report on. So, this is kind of where people get tripped up, and being consistent is important. So in the example of the OHA reporting piece here, making sure that personnel costs always scrunches everything, taxes, fringe benefits, all of that together, and not listing maybe fringe one time in personnel costs and one time in like service and supply costs. Being able to be consistent about it will keep you on track on budget side. So having that mapping really, I don't want to say keeps you honest, but it makes it easier to be able to, you know, relate a large GL listing like this or a large expense listing like this to what a summary budget would be that they're providing. So, how can the accounting system be set up to easier to manage that easier? There's a couple kind of schemes or ways that the accounting system or your accounting department will do this. So the crux of it is the accounting system needs to be able to report the amount of revenue and expenses for a given grant over a period of time. This can be difficult if you have multiple grants that are funding one program, and the way that your accounting system is set up is to do it by program. In that case, you're going to have to kind of combine the grants together and make sure that you have expenses to cover that, or break the expenses apart into multiple parts, or have your accounting department do that so that you're not double dipping and paying for the same salaries, for instance, from two different grants. So being able to do that to accomplish this of being able to pull out revenue and expenses of a given grant over a period of time is easy. There's multiple ways to do this, but I think the easiest way is, especially in smaller organizations that use like QuickBooks, there's classes or departments that are established that report the grants revenue and expenses, or revenue expenses of the entire organization in departments, and there'll be columns set up. I'll have a example of this coming up. The other way, in larger organizations or in larger kind of accounting systems that don't have that class or department system with it, is to assign specific GL codes to identify grants and projects. It's usually like a leading or ending 3-digit series or 4-digit series, could be 5 or 6 I've seen. And that really allows people to pull grant reports with those trailing or beginning numbers that show expenses related to just that GL coding. And I have an example of this. The last one that I've seen is a customer function. In QuickBooks, you try and kind of tag or relate grant funds and expenses with like a customer. We won't review this method today. It requires a bit more oversight to run correctly, and I can kind of show you easier when we're going through the examples. But oftentimes, if somebody is running an accounting system this way, and they're logging grant receipts and expenses using the customer function, and they have very broad like departments or classes, or if they're don't have department or classes at all, they just kind of have an administrative and a program side. This can take more time and effort to manage, because you need to make sure that all of the revenue and expenses are tagged with a customer, or have a customer or grant associated with it. And these other two, the classes and departments, or the GL coding, it's much easier to run an easy report. Your accounting department can run an easy report and know that all of those have been assigned, that all of the expenses have. If you're not using comparative reports in this customer kind of approach, it can be difficult to know if all of the expenses have been classed. So what does that look like? I have an example here where this would be like an example of the class or department kind of way to go. So you have, this is a very simple nonprofit with 2 programs and an administrative function. And so when it goes like this, you can see like fund with numbers here. It looks like fund with numbers is like a reimbursement grant, because you have the exact amount of income that you do expense here. Whereas like Apple Pie looks like maybe it is funded through a couple grants and donations where they actually have a profit. So they were given like an amount of money to run this program. This could be multiple grants in here, but making sure that you have, that this Apple Pie is funded by, say, 2 different grants that make up this 45,000, you'd want to pull those apart and kind of make sure one grant is funded, the other grant maybe isn't. So if you have multiple grants that are running one program, to be able to divide them up and make sure that you're not double dipping in them, or that the grant funds are being expended in a timely manner. It's not unforeseen that you would have like profit or net revenue, as they call it in nonprofits, on a program. This is how organizations gain like cash funds to be able to operate administrative costs. You also notice the administrative indirect rate here. This is the 10% we talked about earlier. It gets a little more difficult I guess not difficult, but it takes more time to kind of suss this out if you're using the general ledger account, where you have the leading department codes here. So here is kind of the map key, or if it has 000 after it, that's administrative. If it has 0110, that's fun with numbers, and 020 is Apple Pie. This approach, it gets a little unwieldy if you report all of them. In fact, I had to truncate this profit and loss so it would fit on the slide. I couldn't even get all of my expenses in there. But what you would do is, if you wanted to look just at the fun with numbers grant, you would just run the ones with the leading 010 here. and have an accurate. My preference, if you can do it or you can swing it or you can ask for it, is this way, because I think it's easier to see for board members and for like staff that needs to report on this stuff, as opposed to this is very much an accountant's view. It makes it, it makes it easier for the accountant to work with and classify things here. But I think it can be muddy. It can kind of muddy the waters if somebody was to try and look at this and see where they're at with their programs. I feel like this view here gives the layman or somebody that's not in the accounting department an easier way to view these. So if you have a choice, or you can get reports from your accounting department that puts the information that, or at least gives you the idea of how much money come in and how much expense has gone out for your specific program or grant that you're working on, that would be ideal. If they have to give it to you like this, making sure that it's coded correctly and you're getting just a profit and loss or statement of financial activity that relates to just the department code that you're working in or the grant code that you're working in would be ideal, so that you know that you're working with just your numbers and you're not having to pull apart other programs out of what you're seeing, would be ideal. So two different methods, I think. I don't necessarily know one is better or worse than the other, but I do know that, like, I think for somebody with limited accounting knowledge and kind of looking at it, it would be easier to see this version of it.
Hey Jay, there's a question in the chat about for taxes, the employees pay from wages. Do I include that in wages or taxes?
So yeah, like I think in these expanded ones here, I think what they're getting at is often in nonprofits, you want to include the employee side of taxes into payroll. So often you have to allocate funds, and we'll talk about allocating funds in a bit. But when you have the employee and employer taxes, when I do the allocations for my clients, I'm always putting that employee tax and deductions back into their payroll. And then the employer taxes are the only thing that's booked to taxes themselves. Now, that's not a hard and fast rule, but it's usually how nonprofits budget. So I would say the tax portion that you're asking about, you need to go back and look at how the budget was written. But as a rule of thumb, I usually like to only show the employer tax. Couple reasons for that. FICA is not, like nonprofits don't pay FICA as part of the employer tax. So it's kind of like overstating taxes, I guess. Anyway, when you do it with just the employer tax as a tax line, you're really showing what the organization has to pay for taxes, or like known as like the employer portion of taxes. Everything else that's employee related is coming out of their gross wages. So I think it's just easier to see from a budgeting standpoint and from a management standpoint what the organization is putting out for taxes. But it doesn't mean that I haven't seen where employee and employer taxes are scrunched up and reported on that tax line. I just think it's easier for planning purposes to have just the employer side. But again, I would say if there's a grant already in place or there's a practice already in place in the nonprofit, then those need to relate back to the budgets that you're submitting for grants and to be consistent. I think the biggest thing here is to stay consistent, if somebody's been doing it incorrectly or not the way, I don't want to say incorrectly, if somebody's been kind of logging employer and employee taxes on there, then I would say you can always go back and reclass or have the accounting department change up how they're doing it. But to stay consistent with it is the biggest thing, I think. Hopefully that answered your question. So actually, it's a good segue into how to allocate expenses and what that actually means. So expenses need to be, essentially broken apart for the programs or grants that they may benefit. So you think of something like there's, and there's three different types of expenses. There's a direct expense, and that's when an expense is only benefiting one program or a grant only. So think of like, direct care staff wages, program supplies that are only applying to one grant or one program. Those are pretty simple to, you get the invoice in. This is only for Measure 110 grant. So all of that bill gets coded directly to that program or grant. 100% of that bill goes to that specific grant. Then there's those administrative or overhead expenses. So they're necessary for the operation of the organization, but they're not related to any program. So think of like an executive director's time spent, running an organization, or HR representative that is making sure everything's in compliance for retirements and stuff like that. It benefits the entire organization, but it can't be attributed only to a program or grant. So that's why you try to claw back some of that money and that indirect allocation or administrative overhead allocation that we talked about, the 10%. And then the last one, and really where you get into the allocation of expenses, is shared expenses. And shared expenses are direct expenses, but they benefit more than one program. So you think about things like PureLink. A lot of organizations are using PureLink to track like participant data in their grants, or program insurance, or you have staff that work in multiple grants and they take like a training course for CPR or peer support or anything that goes along with the delivery of services. It may benefit not just one grant, but you need to allocate it to multiple grants if that person works in multiple areas or works on multiple grants. So how do you do that? There's many different ways. This is not an exhaustive list of how to allocate, but a couple of common ways that it's done is through square footage, like rent. If you literally have a map of your organization and you have administrative offices, program staff offices, you can literally take the percentage of that square foot that's used for program versus administrative and do it out. Most common way is time and effort. Better said, it's like hours on a time card, and you use that to allocate shared expenses. So, the PureLink or those shared expenses that we talked about before, if you have everybody reporting on a time card, you can use that time card as a percentage of total to be able to allocate those expenses. And then the last one is estimation of usage. The beginning of every year, you determine Bob's going to work 25% in this program, 25% in this program, 25% in that program, and 25% in admin. For the rest of the year, you allocate his time or any expense associated with him using those percentages that you estimated. He'll still have to keep a time card, and you need to revisit those estimations when things change, but it's another way to kind of make it easier on that. on allocating all these shared expenses. So you should choose the method that is easiest and meets compliance. So do you have or want to have federal grants? I mean, federal grants are very particular about how allocations are done and making sure that the method that you're choosing meets the compliance behind the grant. So I think allocating based on hours worked is probably the most bulletproof, and direct wages, not mixing rates of people, not allocating based on a percentage of total, but allocating each individual's wages. It can take more time, but you're really bulletproof against, if you allocate that way, you're really insulating yourself from any kind of finding when it comes to federal grants. So, and then last but not least, writing this all down and having a good fiscal manual that everybody understands. A lot of times program staff are like, oh, I'm salary. Why do I have to write my time down? Making them understand that the reason why you're putting down your time, even when you're salaried, is so that you can accurately allocate their wages and expenses based on that time. So, so then another thing that I think is really vital, especially for program staff, because often program and staff and managers are doing their best to deliver as many services as possible to as many people as possible. And you want to loop them into making sure that they're staying within budget and spending as much as they need to. So having budget to actual reports on a regular basis. A lot of grants, especially reimbursement ones, ask that they be done monthly when you send in a reimbursement invoice. But often you'll be asked as part of the financial reporting package, much like the reporting package that is being asked to be given back to OHA over 110. They're showing, this is what a budget to actual actually look like. Here's the budget amount. Here's how much you've spent to date. It'll give you a percentage. It'll give you the remaining funding. It'll even give you a remaining funding percent. I think this should be done more often. The better, the more often, the better, because this keeps program staff saying, oh my gosh, I have more money to spend on service and supply costs. I've only spent 50% of it and I'm 3/4 of the way through my grant. I can buy more things. I can do more things with my participants. So doing one of these budget to actuals with program staff from the accounting department or from the managers and directors and being able to deliver that to staff that's running these programs does so many things. It gives them the ability to be able to spend when they need to spend or pull back spending. Maybe they've overspent. Maybe you need to go back to the grantor and ask for more money because you've just had more demand than what you thought. Or the opposite. I'm not spending as much. We haven't had the demand that we thought we were going to be. Let's go back to the grantor and ask for like a no cost extension. Grantors don't like to take money back. They've already earmarked it and given it to you. They really want you to spend to the penny almost. And doing these budget to actuals and making staff and directors aware of what's left on their budgets helps everybody. And it's not a scramble at the end to ask for more money because you have people that are relying on those grant funds to fund their, wages and stuff. So, I've kind of given an example of what it would look like. We can go back to our fund numbers learning kind of example here where, this is for a fiscal year for one of their programs, and you have the budget, and assuming that they run under a fiscal year of 630, you have a budget and an actual, and then what the difference is here. So they can see, wow, you ran wages right up to the edge. Good job. There's $50 left, and then, oh, why did you overspend on professional fees? Somebody raised their rates mid grant. So this is an example of a budget that, or, a spending habit that came very close to meeting variance. But if you had one that was largely out of whack, where you were understaffed, you could ask for a no cost extension. Hey, listen, I know we didn't use up all of our grant funds. Can we get another month or two to deliver these services and use up the rest of our grant funds? Grantor would usually say yes. So giving you a letter saying, we give you an extension, don't worry about it. Take another month or two to be able to spend down the funds is vital. And again, looping in your program staff with the financial side, I think makes everybody's life easier. The financial department isn't having difficult conversations about how a program is out of money, and only noticing it when they see it, or they're getting reported back from submitting invoices that they're over budget or that there's no money left in this for them. Those are harder conversations than being proactive about it and in either needing more funds or needing more time. And I think it's an easier conversation to have with grantors sooner rather than later. It gives them more time to find you more money to be able to operate these things. So how are grant disbursements done, or how do you get paid for this stuff? So again, we talked about before, lump sum given for an award, or lump sum increments for multi-year or multi-step grants is often done. We talked about like the quarterly or monthly reimbursement kind of schedule that happens. If you have federal funds, usually they have it's literally like logging on and drawing down money from like an outside bank that gets into that. And there's some statutes that happen around that. You have to have 99.999% of the time, those federal drawdown sites require that you've spent the funds already, or you're gonna spend the funds within 3 days. So I always like suggest my clients, just in case there was a mistake in the accounting system, to draw down funds about 3 days before payroll's paid. And that really, it's almost like a CYA, because just in case maybe there was a mistake or a fat finger entry where an extra zero was put on an expense that needs to be fixed later, you can, state that, well, even though we misdrew down, we actually had expenses that were in the pipeline for payroll. So you're not getting hit with, you drew the money down too soon. And the other one is, of course, those final payments or conclusion of milestones or the completion of a contract requirement. That's when you get your money. So for planning and for being able to deliver these services, it's really good to plan around the payment schedule, understand that there's free cash flow to be able to pay for services. Often it's something that a lot of nonprofits don't think about, but planning how you're going to fund given the payment schedule that they've laid out to you. And again, being able to go back to that grantor and negotiate with them, hey, I know you're supposed to only pay us, at the end of the time, but we really need money to be able to support this program. Can you disperse funds earlier? Or we don't need the funds. It would be kind of a weird situation if you needed to wait to give you money. But having, being able to understand from the budget side and from the requirement side of understanding the grants, being able to know when you're going to get paid and be able to manage cash flow around it. So, yeah. And then there's reporting. So this is what OHA has come through with I know I keep going back to this kind of report thing here. You'll notice that you have instructions, but you also have like a financial portion of this, as well as a narrative portion of the outcomes on this. So when you're asked to report on these things, it's really, the grantor monitoring the progress of the program. And so you're talking about it's multifunctional or multi-department in your organization to be able to put together the narrative portion of that. And the reason why they do this is to be able to guard against fraud. They want to see where your use of funds is at, and they want to make sure that the organizations that they're granting to is following the types of outcomes that they want to see. So when we're talking about that OHA report, we're really talking about, there's two pieces to this. There's really the financial piece that somebody's putting together, as well as a narrative piece on the outcome of what you're doing. And they want to know the good, the bad, and the ugly, because they learn from it, and hopefully the organization that you're working for learns from it. So being able to be open and honest, of course you want to try and put as rosy of a spin on it as you can, but being able to report that stuff using good financial data as well as narrative data from the program, people in the program themselves or running that program or grant is vital. So if there's one key, I think, or one kind of overriding kind of theme to this, it's departments working together. None of this should be siloed. The accounting department shouldn't be siloed off from program staff and vice versa. Being able to work together and bring this information together to be able to report on this stuff is vital. So the most successful ones I've worked with have this back and forth between program staff and financial staff and really the entire executive or administrative suite, working closely with program directors, staff, managers to be able to get all this stuff to be able to report on it. So, we can kind of breeze through this. I know we're getting late we started a little late, but there's really types and frequencies of reporting. OHA kind of says, hey, bring this forward in the measure 110 portion here to be able to grant milestone reports. That's when, it's usually narrative, but we see like with 110, it can be both financial and narrative. If you have federal funds, there's a requirement which can actually shut off your funding where you won't be able to get money anymore if you don't make these, and you can get audit dings for not reporting what's known as FFRs. And they're usually reported quarterly, yearly, and at the close of a grant. But those requirements change from department to department in the federal government. So the Department of Labor will have different reporting requirements than like, SAMHSA or the Department of Agriculture. So, and it can be sometimes difficult to find out what the reporting requirements are on these things. So check your grant liaison, and then check for any of these like notifications. There was a client I had that they had to do quarterly reporting, and then all of a sudden out of nowhere, those quarterly reports stopped showing up on the report website, and there was no notification of why. We finally found out that they did away with the quarterly reporting requirements, and it's only annual now, that they're annual and grant at the conclusion of grants that they needed to file. But so again, working with program staff as well as financial staff and making them, making the financial and accounting department aware of the reporting requirements, or giving them those grant documents. Again, being collaborative and not siloing off where only the grant writer or the administrator of, or the director of programs is the keeper of those grant documents, that should really be shared with the accounting department so they can do these funding reports. And then again, there may be other grant specific requirements for reporting. So common mistakes I've seen in my career during the proposal process, just not getting I probably sound like a broken record here, not bringing everybody together to be able to do that drafting, siloing it off, and rushing to complete. If you're rushing and you haven't provided enough time for yourself during those proposal processes, you're going to miss something. You're going to miss funding. You're going to under or over budget and have to, come on the back end to kind of massage how that's going to happen, whether it's an extension of time or more grant funds being needed because you vastly underestimated what it would take. During the management process, and while grants are under, it's not, reading the grant requirements and conditions and having grant documents available to everybody, like not following the terms and conditions, not having a good relationship with the grantor. I mean, I think it's vital to be able to, not everything goes as planned. Even if you followed everything in the proposal process and got a grant, being able to go back to that grant manager or that grantor and be able to work with them on roadblocks or road bumps that came in during the granting process. And then the biggest thing is not maintaining proper documentation for expenses or for payroll or for how allocation happens is vital. So there are other things to consider as a financial department and as a grant manager, to think about the rules and requirements of a grant. Don't just assume that a grant or contract have the same requirements as a previous grant or contract, even if it's from the same funding source. Organization that I work with, they have multiple grants from like Clackamas. Every single one of those grants has different like allowable costs. So some of them allow insurance, some of them don't. Some of them allow, trying to get them to be all lined up is good, but sometimes it just happens where this particular bucket of money that they have doesn't allow like professional services. So, you're not going to be able to allocate, your contract bookkeeper's time or something like that. So, and then again, I don't want to sound too much like a broken record, but making sure everybody that's involved with the grant and contract is aware of what's an allowable and unallowable cost. Those program managers and directors are your first line of defense in making sure that unallowed costs aren't coming into the grant. But if you have everybody along the way, including like staff, directors, managers, accounting department, executive, the administrative side, if they're all aware of what's allowed and unallowed in a grant or contract, it makes it much easier on everybody. And then, making sure there's a process to and controls over that, having those budget to actual meetings, milestone meetings, making sure that the grant is on track, understanding if there's matching funds or services that are needed. Understanding all those requirements is really huge. So I know I kind of rushed through it. We were a little bit late starting, but if everybody has time, I can stick around if anybody has additional questions that they'd like to ask. Would love to answer them for everybody and give everybody a chance, or if something wasn't clear that I was presenting, and they'd like more clarification on it, please feel free to type it in the chat or even just come off mute and ask your questions.
Hey, AJ,
Yeah.
I have classes. I have questions about the classes in
Yeah.
So we can't use classes with like the free version. You have to upgrade. And then I guess I'm feeling really lost because I haven't done this before.
Sure.
And so with the classes, can you break up an expense with one receipt? So for example, let's say you purchase something and you need to put it into supplies and startup costs.
Sure.
Can you break that up?
Yeah, absolutely. I'm assuming you're using QuickBooks.
Yes.
So a couple things. Do you have your 501c3 designation yet?
Yes.
Okay. So TechSoup is going to be your friend. TechSoup gives you like a pretty robust version of QuickBooks for about $75 a year. So if you're not a member of TechSoup yet, get membership over there. All you really need to do is have a copy of your designation letter and sign up on their website. I'll put it in the chat here. But that will provide you a really low cost version of QuickBooks. It's like more than 50% off. And what that allows is for you to be able to have that class function for a very low price.
Okay.
But the other thing that you were asking about is breaking apart an expense. Yeah, it's very easy to do that in the invoice section, or even if you're just if you're operating on more of a cash basis, like you're recording it when you write the check, you can have multiple lines there that go to multiple different things. Often that's how a lot of my clients put in their credit cards. It can be clunky sometimes to use QuickBooks credit card hook, where you hook up the credit card to the accounting system. So they often put it in as like a journal entry or one large expense at the end of the month, and they're coding different expenses on that credit card statement and using the statement and the receipts as the backup for that, and the approval then of that. So it's just literally adding multiple lines to the expense portion here.
Okay.
Makes it very easy. Yeah.
Do you know, is there somebody who will teach you how to use QuickBooks rather than, because where I'm having issues is when I call QuickBooks for help, they're like, oh, I can't answer that question. I'm not a bookkeeper. And then when I call the bookkeeper, they're like, oh, I'll kind of do it for you.
Mm-hmm.
But I'm looking for someone to teach me how to use QuickBooks.
Sure. So I'm sure there is like one. I don't like for my company, I'm software agnostic. I don't care what software anybody uses. It all does the same thing under the hood. But one of the main reasons that I recommend QuickBooks for nonprofits is not just because of the stellar discount you get on the yearly rate. It's the most widely used accounting software anywhere, I think, around the world. So there are like training videos that you can find on like YouTube that really walk you through all of this stuff. There's like even like Reddit has like QuickBooks like subreddits that you can get into and ask questions of. There's a lot of resources there that you have access to as a QuickBooks user because it's so widely used.
Okay.
So I would look to those, and those are low cost to you, you know what I mean? Like low or no cost.
Right.
But I'm also sure that there is organizations that would teach that kind of thing. I don't quote me on this, but I think there are classes, if you Google something about, QuickBooks training or something like that. I even know local chambers of commerce, like, I don't know where you're located, but I know like I'm part of the Beaverton Chamber, and they offer like classes on business management for like nonprofits. And I think they have like QuickBooks training as well. So you might look to like those and see if those are available in your area for sure.
Okay, great. Thank you so much. I appreciate it. And I've bookmarked TechSoup, so I appreciate it. Thank you.
And if anybody has out, what I'll do is I will make the good point, Karen. NPO does offer QuickBooks training. So look with the Nonprofit Association of Oregon has QuickBooks training. I totally forgot to mention them. Thank you so much, Karen. It's been asked in the chat a few times. I will be I will be sending out a copy of these slides to everybody so you can go back and review them. And Diana can make my contact information available for anybody that may have follow-up questions that, oh, I forgot to ask. So we can do that as well.
And just a quick to Laura and anybody else. So my role with HJRA is to provide technical assistance to all of you all as nonprofit organizations doing this work. And so we have a budget to help provide one-on-one technical assistance with a contractor. And then also thinking about what other workshops we can be providing throughout the year that would be helpful to everybody. So Laura, if you don't find the resources you need in terms of QuickBooks help, then maybe HJRA can help you connect with someone who can, and we can help provide that support. And then anybody else, as far as Measure 110 funding or thinking about organizational admin sort of systems and processes that you all need assistance in, we're happy to also kind of help make a connection for you and provide some of those hours on the front end. So feel free to contact me, and you guys all have my email, and I'll send out AJ's information as well to everybody. Any other questions? Okay. Well, I want to thank AJ very much for doing the presentation for us this morning. If there are additional questions around quarterly reporting, feel free to reach out to myself, and maybe AJ as well can also help with some of those, but we can make sure that we're connecting you with the right information around what needs to be turned in and when, and how to be reporting back. We're here to help you all. So thank you so much for joining. Sorry about the little bit of the mix up in the morning with Zoom. We'll try to fix that moving forward. We'll have some additional workshops coming in January and moving forward as well. So thank you so much. Have a wonderful weekend, and let us know if we can be helpful. Thank you.
Thank you, everybody.
Happy holidays, everyone.
Happy holidays, Ron.
Yep.